Creating a balance sheet is a fundamental step in understanding your financial health, your financial position. Welcome once again to today's live show. I'm super excited about today's topic. Today's topic will help you to understand how you can create your personal balance sheet, which is your statement of financial position. When you are skilled at creating a better balance sheet, that is the statement of your financial position, you'll be able to make sound and informed decision. And remember that sound and informed decision will help you to maximize your potential. It will help you to make sense of your money. Do you get that? So welcome once again. The help that you can do for me right now is to ensure that you share this video to as much people as you can. Tell us your name and the city you are joining us from, and please kindly help us share this video. Share this video, share this video. Kindly share this video. A lot of people need to have this information. Information is the only key to greatness in life. So your ability to get the information and also take action on the information will determine your financial position. Now, our topic for today is how to easily prepare your personal balance sheet. How to easily prepare your personal balance sheet. I will ensure that I break down this topic to your understanding. Even a layman will understand what a balance sheet is. Now, let us get into the topic. Welcome. Thank you for joining us once again. Thank you. Welcome. So today's topic is how you can prepare a better balance sheet that will help you to make sound and better financial decision. Now, what is balance sheet? Balance sheet is what you own, understanding what you own and what you owe. That is assets and liability. Knowing what you have, which is your assets, the asset that is producing cash flow, cash that is bringing in cash flow, and then also knowing what you are owing. Do you get that? So knowing what you have, that is what you own, and then what you are owing, your debts. So your ability to use what you have, which is your asset that is producing cash flow, your ability to use your assets to fund your liability will determine how sound your financial position will be. So let's go straight to the formula for that. So we have assets. Assets is equals to liabilities plus equity. Assets is equals to liability plus equity. Now, we all know that assets is what puts money into our pocket. Asset is what puts money into your pocket, either through your business, anything that puts money into your pocket, that's asset. Then liabilities, those things that we incur that are yet to be paid for, they are your liabilities. Those are the those things you incur, but you are here to pay. That's accounts payable. You incur those particular products, but you are here to make payment for it. So that's liability. Those things that takes money out of your pocket. That's liability. So equity. Equity also means owning. It also means owning what you own. What you own. That is your equity. So now, we need to now have a proper understanding of this. Having a proper understanding of what an asset is, and liability is, and equity is, will determine your greatness in life. Will determine how big you will be. Will determine how rich and wealthy you will become. So your ability to understand assets, liabilities, and equity will determine your financial freedom. So what I want you all to understand is that as from now on, start seeing yourself as a company. See yourself as a corporation. Don't just spend money anyhow to impress people that don't care. Be very serious with how you treat your assets, liabilities. Be very serious with that. So now, let's say, for example, I buy a property, I buy 10 units of a 4-bedroom duplex that costs 100 million naira per unit. So let's say 10 units, that's 1 billion naira. 1 billion. So this is 10 units. 10 units of 4-bedroom duplex. So let's say 10 units of 4-bedroom duplex costs 1 billion naira. Now, we want to understand how we can use these liabilities and equity to build our assets. Most rich people, they use liabilities to build their equity. That is what they own today. In fact, most billionaires you are seeing, most of them, they use debt. They learn how to use and manage debt in a smart way. So if you want to be rich and wealthy, trust me, if you want to really go far in life, you want to be big, you must understand the principles behind knowing how to use liabilities to build your equity. So in the statement of financial position, that is your balance sheet, your liabilities must be equal to your equity. It must be equal. And how can you make them equal? How can you make them equal? You can make them equal by understanding how to use your debt, which is your liabilities, to build a better equity, to build a better financial future. So now, let's say you buy 10 units of 4-bedroom duplex for 1 billion naira. So out of this 1 billion naira, let's say you approach the bank for a loan. As a smart investor, you don't just put all this money at once. In our Nigerian bank, mortgages are 30% down payment. So let's say down payment of 300 million. 300 million. So you make a down payment of 300 million, and the bank loan, mortgage of 700 million. So bank give you 700 million. Why did bank give you 700 million? Because they believe that the 10 units of 4-bedroom duplex you are buying, we produce cash flow. We produce positive cash flow you can use to fund this your debt, which is your mortgage. So the bank, they are so smart. They know that the assets that you are acquiring usually produce a positive cash flow. Bank don't just give out loans. Trust me, bank will never give you loans to buy stocks. Bank will never give you loans to buy treasury bills. But whenever they see that you are funding a real estate project, they understand the cash flow that is in real estate projects. So they will give you this 700 million. So once the bank now give you 700 million, you purchase these 10 units of 4-bedroom duplex. Then the cash flow you are now making from this 1 billion naira 10 units of 4-bedroom duplex will now be used to service your loan. So as you are using the cash flow that you are getting from this 10 units of 4-bedroom duplex, as you are using the cash flow, the rent, to service your loan monthly, then your equity will start becoming bigger. You start having more equity, and then your debt will reduce. Your debt will reduce. So your ability to know how to use debt in a very smart and decent way will determine how far you will go. How far you will go is on your understanding, on knowing how to use debt, liabilities, to fund your equity, your dream. Your dream is to own a property worth 1 billion naira, which is this. But all you have is 300 million naira down payment. Then you approach the bank to give you this 700 million. So the bank fund you because they see that you are putting your money into a good project that will give cash flow. Bank also, they are in the business of making money. So they will give you the cash flow. They will give you the cash flow. So once they give you the cash flow, you start using it to fund your debt. And as you are funding your debt, your equity, you are having more equity, lesser debt. Simple as ABC. More equity, lesser debt. And at the end of the day, when you are done using the profit you are making from this 10 units of 4-bedroom duplex to fund your debt, you will make profit. So that is how billionaires do. That's how billionaires do. Take a look at Dangote Refinery. Do you think that all the funds that he used to put up Dangote Refinery is from his pocket? No. No. At least about 300 billion naira worth of debt was sinking to the project. And if he's not sure of that amount he put into the project, if he's not sure that it will generate massive cash flow, he will not put it. So, guys, I want you to understand that learning how to use debt to fund an equity, an asset that will produce positive cash flow will determine how far you will go in life. Will determine how far you will go in life. Welcome. Thank you for joining us. Please kindly tell us your name and where you are joining us from. And please kindly share this video. Share this video. That's the only favor you can do for me. Share this video to as much people as you can. Share this video. Kindly share this video. They need to understand this balance sheet, which is the statement of financial position. See, the better understanding we have on our financial position, the more we make good and quality investment decision. It's not hard. Very easy. So there's something called acid test ratio. So acid test ratio determines the period at which you will use to fund your debts. And it is usually short term, within the space of, let's say, 1 year. The period that it requires for you to fund your debt. Your debt. And the more you fund those debts within this shorter period, the more your equity becomes bigger, the more profits you make. So your ability to understand how to use debt in a smart way, not to be using debt in a stupid way. A lot of people will go and take loan from the bank. Instead of them to put it in an asset that either you put it in, let's say you use it to buy an equipment for your business. Because you are sure that that business will bring cash flow. That is still smart. But when you take a loan from the bank, you now want to do something else. My brother, my sister, you will surely lose money. You will cry. So that's why I say a lot of people, they are running from the bank. Bank will just come and acquire whatever you have. If you use the loan that you're taking from the bank to do something else, you don't see wealthy people fund their lifestyle through the asset that's bringing in cash flow. So a lot of people, we see a lot of young people, they just want to show off. They want to fund their lifestyle with loan. With loan. So your loan should be used for an asset that is sure to bring profit. Do you get that? So your liabilities, whatever liability you are taking from the bank, ensure that it's going into an asset that will bring cash flow. So that's that. I believe we all understand that. I believe you all get that. So, but yeah, welcome, Adebola Bello. I see you. Welcome. Can you tell us your name? Please kindly share this video to as much people as you can. Share this video. So that's that. The formula for the balance sheet is asset is equal to liability plus equity. So the smarter you are in getting this liability to fund a project, the better your financial situation. So you must be very smart when you are taking loan from the bank. Ensure that you are putting into a project that will bring cash flow, not to show off. Don't take loan and then you are using it to show off. No. So the better you are good at having a better financial position, the better you move fast in life. So understand this, and then you will move faster, and then you have a better financial health. So that's so now let's move on to the next set. Oh, where is the duster? Okay. So now I'll be classifying assets and liabilities. A lot of people don't really understand this asset and liability thing. So we'll be telling you what asset and liability is. Asset. Let's start with asset. Asset. Yes, under assets, those things that number one asset you have is your cash. In accounting terms, so they will say cash and cash equivalent. But I'm just making this simple so that you can understand this, so that you can prepare a better balance sheet for yourself. So I don't want to make things too complicated. So under assets, cash. Your cash is an asset to you. Inventory or stocks, that is your equipment, things you have, your goods. So let me just use, okay, okay, some people might not understand inventory. So let me just use goods. Your goods is an asset to you. Yes, it's an asset to you because, of course, it will bring, when you supply these goods to a supplier, it will bring in cash flow. Do you get it? That is accounts receivable. When you supply these goods to a supplier, you are expecting cash flow. That's accounts receivable. That is, you are expecting money from outside. So accounts receivable is cash flow. Accounts receivable is an asset to you. So you are receiving based on the goods you dished out. So cash is an asset to you, as is what you have in your bank. It's an asset to you. Of course, it can be used to fund another asset that will produce positive cash flow. So also we have your life insurance. Life insurance is also an asset to you. It's also an asset to you. So that's that. Then also, what other things is an asset to you? Let's say your machineries. That's for those that have factories. Machineries. It's an asset to you. It's an asset to you. Also, your investments. Your investments. Investments. Either your stocks, bonds, treasury bill. They are all assets to you because they are what can be easily convertible into cash in any bad situation. You can easily convert any of this into cash. Did you get that? So assets, your assets must be liquid. They must be something that you can easily convert into cash, into liquidity. So understand difference between assets and liability. Do you get that? Your car too can be an asset to you because you use it for a day-to-day activity. You use it for a day-to-day activity. Some people have lorries for maybe they want to be packing goods and stuff. So those things are also part of your assets. They form your asset base. So your ability to understand difference between asset and liability will determine how far you will go in life. Your ability to determine the difference between assets and liability to determine how far you will go in life. So also your business interest is also an asset to you. Business interest. Some people, they invest in other ventures. That is, they own a part of the company. So the interest they are getting from other businesses is an asset to them. It's cash. It's cash. It will bring in cash inflow for them. So those are the classes of assets. And also, what else? What else? What else? What else? What else? What other investment can we classify under assets? Okay. Your real estate. Oh, real estate. Real estate. That is your apartments, multiple apartments you have that is bringing in cash flow for you. It's an asset to you. So your ability to understand this, all what I listed here, will determine how far you will go. So that's an asset. Now, let's now move to liabilities. 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 Six. Number one liability, we have credit card. Credit card. Credit card, things that you pay, things that you buy, but you did not pay in cash. You are using your credit card to pay. It's a liability to you. That is accounts payable. You have to pay. Accounts payable. That is the goods that you purchased, but you are here to pay. So credit card is a liability to you. Please understand that learn to use your credit card wisely. Don't abuse the use of your credit card. Don't use what you know that yes, you will not be able to, you will not be able to pay back. It is financial stupidity. A lot of people just want to impress their friends. They go and buy a big car that their assets cannot even fund. So if your asset is not, if you don't have times 5 assets, whatever you want to buy, then you can't afford it. You can't afford it. You want to go on vacation, you don't have times 5 of that money. It means you can't afford it. So why go on vacation? Why not focus more on creating more assets? Especially this real estate. Especially putting your money in private equity, businesses. Why not sit down and focus more on creating assets? Why are you looking at impressing people? Who are you impressing? Who are you impressing? If you want to have a sound financial health, then you must focus more on creating assets. The rich and wealthy people understand the principles behind creation of assets. The poor people just want to be, they want to be impressing. Who are you impressing? Who are you impressing? You are impressing your way into poverty. You don't know. As you are right there, you have to be thinking strategically. How can I fund my assets so that my assets can be times 5 of my liabilities? And you can do this by understanding your weekly and monthly. How much am I owing for this month? How much are my expenses for this month? How much am I looking at making this month? What kind of asset am I looking at acquiring this month? At the end of this month, what do I want to be worth? What will my net worth be? So the higher, welcome, Mr. Tunde, I see you. So the higher you fund your assets follow, the lesser liabilities you have. So as a person, you should focus more on creating more assets. Focus more on having all these assets in your life so they can easily fund your liabilities. The more assets you have in your life, the easier you get to financial freedom. You want to make impact, then focus on creating assets. You want to make impact, focus on becoming rich. A poor person can make impact. Of course, you need to be rich. And how can you be rich? You can be rich by creating assets. You can be rich by creating assets. Very important. So we must be very careful with that. And also, credit card is part. Okay. What else? What else? Short-term loan. We can also classify it under. Okay. Let me add it. Short-term loan. Short-term loans. Short-term loans. All those loans you are taking, ensure that you are not taking a loan that will kill you. A lot of people, they have taken loans that have made them to commit suicide. They are taking loan on a project that they are not sure of. Before taking loan, look at the loan very well. If possible, get a CFA. Get someone that is a chartered financial analyst to help you to do proper analysis on the risks you are about to take. Will this project cash flow? Will this project take me to financial prosperity, or it will take me to financial debt? So before taking loans, ensure that the loan you are taking is a smart one. And a smart loan is a loan that will give you cash flow. It's a loan that you put into asset that is guaranteed to give you cash flow. And what kind of asset? Asset like real estate, because it's the safest. Bank will never give you short-term loan to fund a stock. or to buy bonds, or to buy shares, because they are not sure. But banks are always sure of real estate. So whenever you are taking loans, ensure that you are using the loan to buy assets. Assets. Don't take short-term loan to impress people. Don't take short-term loan to buy designers. When your life is not fully formed, you are taking short-term loan to buy designer. Who do you want to impress? Who? Welcome, Mr. Moses. Thank you. Thank you. I see you. Welcome. Please kindly share this video to as much people as possible. Kindly share this video to as much people as possible. Kindly share. So, another type of loans that people do take is some people take car loans. Car loans. Taking car loans, especially a car that you know that before you pay back, your assets can't even pay back. Then why are you taking the loan? Who are you impressing? Why not wait to build excess cash flow under your assets column so that you can be able to afford times 4 of that car? Don't just take stupid loans. Don't take loan to buy a car. It is financial stupidity. If you can't afford it with your asset, then it means it is not a time for you to buy the car. Your asset must be able to produce the money for this car times 5. Times 5. You shouldn't be looking at impressing anybody. Your financial future, you are responsible for that. And whatever decisions you make will either make you or marry you. So whenever you're taking sound financial decision, think about your statement of financial position. This is my financial position. Before you take that move, think, this is my financial position. Can my financial position afford these car loans? Some people don't even take vacation loans. Vacation loans. Vacation. They take loans to go for vacation. Vacation loans. If you can't afford the vacation 5 times, it's not advisable, my brother. You will still go. You will go to as much vacations as you can. Why not just wait to focus more on creating assets? To focus more on creating assets. What I always advise my people, anybody that come in contact with those that have been able to help to create assets, I've been advising them, focus more on your assets column. Don't worry. It's just like the Bible says that seek ye first the kingdom of God, and all the other things shall be added unto you. So that kingdom to financial prosperity is assets. So when you seek first the kingdom of God, which is creation of assets, God made you so that you can be a creator. So your job on earth is to first create assets. After you have created assets, multiple assets, then you can now start using liabilities to expand what you already have. To expand your equity. That is the simple definition of balance sheet. Your ability to use your liability to expand your equity. That's another form. A lot of people use liability to fund what will not bring in cash flow, and that is stupidity. A lot of people make that mistake a lot. Very, very stupid mistakes. So, my people, don't ever make that mistake. So, some people also take mortgage loan. Mortgage loan. Yes, mortgage loan is not bad, but you must be sure that the location you are using the mortgage to buy is cash flowing. If you go and use mortgage to buy a personal home that is not bringing in income, what if you are unable to pay? What if you are unable to meet up with the acid test ratio? That is your ability to pay this loan within the shortest period of time. Your ability to have assets that can easily fund your mortgage loan. That is asset test ratio. So you must be capable enough. Before you go into mortgage loans, you must be capable enough. Your assets must be capable enough of paying this mortgage loan within the shortest period of time. It's as simple as that. Don't make this mistake of just taking loan anyhow. So you must update your balance sheet. Look at it very well. How much every month, every end of the month, I used to sit down and think, okay, what are the things I spent money on? Okay, what area do I need to grow my finances? Okay, what other skill do I need to acquire? So we can also classify skill as an asset. Where's my blueprint? Let me add skill too. skills, skill set. So your skill too is also an asset. Okay, machinery is under tools. So your ability to acquire more skills, more competence in whatever industry you are, will determine how you will be able to grow your assets. A skill is an asset, especially high income skill is an asset. So my people, take this very serious. Take it very serious. Don't joke with it. Your statement of financial position, that is your financial health, where you are versus where you are going. Where you are, the present income, your present lifestyle. Where you are going, a luxurious lifestyle. And for you to get that luxurious lifestyle, you must fund these assets very well. You must be able to fund your assets before thinking about expenses. Welcome, thank you for joining us. Welcome, welcome. So, your ability to understand the proper use of assets in expanding whatever you have. Do you get it? Assets, what you own. Liabilities, what you are owing, your debts. So, your ability to create abundance assets, that is, as much asset as you can, so that you can be able to fund lifestyle, vacations, mortgage loans, car loans, short-term loans, student loans too is also part of your liability. Student loan, student loan. These things take money out of your pocket. All these things are listed under the liability column. Credit cards, short-term loans, car loans, vacation loans, mortgage loans, student loan. Your personal expenses, your electricity. Oh, let me go add that. Electricity bills. Your normal bills, for those in Nigeria, normal bills. That is, okay, let me just put normal. Your normal bills. What else again? Your gym, your monthly gym fee, gym subscription, your data. This data I'm using too is an expense. It takes money out of your pocket. Data subscription. What else is taking money out of your pocket? That is a liability to you. Your rent. What else? Your outfit, clothing, shoes, dates, dinner dates. Those things are taking money out of your pocket. Dinner dates. What else again? Fuel for your car, fuel for your generator for those in Nigeria. So anything that takes money out of your pocket is a liability. Your maintenance, home maintenance and appliances, home maintenance. Also foodstuff, groceries, your groceries, foodstuff. So let's just stop there. It is. So your ability to understand the difference between these assets and liability will determine how far you will go. So my people, I believe you all got value from this. I want you to understand that anything that takes money out of your pocket is a liability to you. And we have them. We have them here. Your car maintenance, electricity, credit cards, short-term loans, mortgage, a lot of things that take money out of your pocket. Home maintenance, feeding, they take money out of your pocket. So I want you to understand that. I see you. Welcome. So you must understand that anything that takes money out of your pocket is an expense to you. So for you to thrive financially, You must understand how to create multiple assets. Understand how to build enough equity that will give you true financial freedom. So your ability to build more equity will determine how far you will go. How far you will go. Your ability to have more people pay you for your skills determine how far you will go in life. Your ability to have more people pay you for your services that you are rendering, your goods and services, will determine the kind of assets you'll be able to build. So don't spend to impress. Don't spend on what will not give you cash flow. As a beginner, as somebody in his or her 20s, 30s, 40s, you should focus more on creating assets first. When you are done creating assets, then ensure that your assets that you have created can fund all your monthly and living expenses times 5 before thinking about, funding anything. Ensure that you have times 4 to 5 times 5 of whatever you are spending monthly. So for you to be financially free, work more on creating assets. I believe you got value from this. Thank you very much for watching and see you on the next episode. So if you are looking at investing in real estate, I am your go-to person. Contact me on 081 011 56057. You are looking at having a one-on-one section with me on how you can make your dream come to reality. That is your dream income. Let's say your goal is to have at least 1 billion naira or $1 billion worth of assets. Then, if let's say your dream is to have $1 billion or $1 million worth of assets, then I will sit down together on a Zoom call. We'll discuss on the kind of assets you are meant to start acquiring. If you are looking at having $1 million worth of assets, then you can also think of real estate in the US. If you are looking at real estate in the UK, maybe you want $1 billion worth of assets, you can think of buying real estate in the UK or Nigeria. So we now sit down, okay, what kind of assets do you need to buy? What kind of assets will give you a good cash flow that will enable you to fund your dream, that will fund whatever liabilities you have in your life? Because this life, we are in a life of income and expenses. So the fatter your income, the better you will do financially. So if you have more income, and how can you create more income for yourself? You can create more income for yourself by having more of assets. So when you have more of assets, then you'll be able to fund all those vanities, vanities like having a Bentley, having, whatever designer you want, whatever vacations you want to be going in the year. Maybe you want to be going on a, let's say, 20 to 30 vacations in a year. Of course, the what will determine the amount of vacations you go in the year is the amount of assets we've been able to create. So my people, if you are looking at investing in real estate, let me know about it. So we'll discuss more. I believe with this few points of mine, you'll be able to understand how you can prepare your personal balance sheet. Thank you very much for joining us, and do have a wonderful weekend. See you on the next episode.